Good morning, everybody. Happy Friday. We'll get started here in about 8 minutes. Take some time to kind of look things over. What's in the news, kind of the headlines, and some of the things that we'll be looking at there. Okay.
This was the radio plays y'all. The girls in bikinis right along. And we ain't feeling guilty. Cause that's the life we choose. Same different and skinny good. So we're trading some looking down behind you. And that's where you find us. Back, I ain't got a cross man. I just working on a home plane. And that's catching this sometime. It's gonna be a party. Just sipping on the party. Anyway, it's easy. Say, still playing, it's getting good. So we're trading sun down behind. And that's where you find us. Back, back on fire. And maybe that's a good like so I think so that I know that one month that I'm not. Still it's getting so down behind you. And that's where you find us. You see that it's just raining. There ain't no need to go outside. But baby, you hardly even know when I try to show you. Song is meant to keep you doing what you're supposed. Waking up too early, maybe we could sleep. Make you banana thing, pretend like it's the weekend now. Pretend it all the time. Can't you see that it's just rain? There ain't no need to go outside. Just made there like a ukulele. Mama made a baby. Really don't mind the breakfast. You're my little lady. Lady love. Yes, I love to lay your legs. We could close the curtains, pretend like there's no world outside. We could pretend it all the time. Can't you see that it's just rain? There ain't no need to go outside. Ain't no need, ain't no need. Can't you see? Rain all day and I don't mind. Telephone saying ringing, it's too early, don't pick it up. We don't need to, we got everything we need, got everything we need is enough. Just so easy when the whole world fits inside of your arm. Never need to pay attention to the alarm. Wake up slow. Wake up slow. Baby, you hardly even know when I try to show you. Song is meant to keep you doing what you're supposed to. Waking up too early, maybe we could sleep. Make you banana, pretend like it's the weekend now. But pretend it all the time. Don't you see that it's just rain? There ain't no need to go outside.
All right, good morning, everybody. Happy Friday. Another week, pretty volatile, things going on in the marketplace. But we do need to address quite a few things that are happening right at the moment. We got a whole bunch of Fed speakers today, 7 during the regular trading hours, a couple after hours with not sure if that spelling's right, but some Hoover Monetary Policy Conference. I haven't found much information about that, but it seems like the feds are coming out and trying to, I guess, save their business in a way. There's always there has been talks about maybe abolishing the Fed or doing some things that on that line. We'll see what happens, but rumors and speculations. But the fact that I've never really seen 7 back to back. We have no economic reports, so the volatility is going to be a bit crazy here this morning as the market opens. Okay. Although, as we do check the volume on the Dow 30 stocks, the volume is pretty much the highest it's been all week. Okay. Which is significant because when we see that light volume, we can anticipate higher volatility. The first Fed speaker that came out this morning caused this big whipsaw right there. Okay. But again, we still have several Fed speakers coming out. Inside day on the equity indexes. Okay. So let's come back and look at that. S&P, NASDAQ, Dow, Russell, all indexes are in pre-market trading inside the prior session's range. Okay. Indexes have pretty much a narrow overnight trading range. So we do suspect that there are going to be some trending markets coming into play, but not right at the beginning. Okay. as I was going through the pre-market routine and checking things off, I noticed a lot of mixed signals. Okay. Now, the first indication when I come into looking at the marketplace is, are we still inside the prior day's trading range? And if we are, expectations are that things are going to be choppy. The next thing I look at is, okay, what's the Dow 30 stocks doing? Is there heavy volume, light volume, and so on? Okay. Right near the session close yesterday, we did have a pretty big drop in price. Okay. On the equity indexes, we still have an unfilled opening gap from yesterday's trading session. Okay. We also have a lake base zone right around that same area. Okay. With the lack of economic reports coming out, things are going to be a little, well, we're going to have to rely on either Trump tweets, and there's certainly several of those. That big whipsaw action was a comment that was posted saying, hey, 80% tariffs will be, you know, okay for China. And, I think he's just poking the bear because he wants to get some negotiations on the table. I do think there's going to be some outcomes, good outcomes of that. But there's the meetings will happen over the weekend. Over the other thing to point out is, we have a huge onslaught of new products that have been introduced to the exchange traded funds, like in crypto markets. We've also seen a strong move up on Bitcoin. Okay, which is getting back up to that. We got just almost got back to the 105. I do have a small supply zone up there about 106 to 109. Okay, large time frame, we're right back at near the highs. Okay, just a note as well. We can see that the picture of the big banks and institutions are starting to manifest in the market. Okay. Now there has to be when they make an exchange traded fund, there's a certain amount of things that they need to hold on to, a certain amount that they have to have in their shares or number of coins and things to back it up. Okay. Now, with the market, with the equity indexes doing what they're doing, and all the new ETFs that have come out, okay, a lot of things. So there seems to be a big shift of capital moving around, okay? And not all of it is moving into the stock market, okay? Another thing to watch for is that we got the 5, 10, 30-year bonds and notes, okay? This is also an indication that there's a lot of movement into the, moving out of the bonds and notes and possibly into cryptos or stable coins and things like that. Okay. There's a huge shift. And when you see these big drops on the 5, 10, 30-year bonds and notes, these are massive. Okay. The amount of volume that these produce on a day-to-day basis is enormous. Okay. So the market's hedging and the market's participating crypto versus the equities has made quite a shift. Okay. Now, some of that is noticeable as we point out the light volume. Okay. As we're noticing some changes in the stocks and in the futures and so on, as far as there's something that's not quite normal. Okay. Now we're noticing all those, and the information I'm sharing with you doesn't necessarily make a trade at this moment. Okay. Banks and institutions are still doing their normal thing. okay? But it does appear that there's going to be a big shift here sometime soon, okay, where, we're going to noticeably see some differences in the price chart, okay? All right, so the other thing with that we should keep in mind here is, Powell's term is just about up, okay? With the existing Fed speakers, kind of watch who is starting to become in the spotlight, okay? Because whoever Trump appoints as the new Fed chairman, the representative to uh, the the government, okay? Can't even say U.S. corporation anymore because that has been pretty much abolished, and we're now a republic again. Okay, so that's also a major shift. But who is going to represent us after Powell, or who's going to represent the U.S. government on behalf of the Federal Reserve? Okay, a lot of interesting things as you kind of dig down that rabbit hole. The media in what was in the news was really mixed. There were some positive things, there were some negative things. Okay, and there wasn't a lot of, hey, we're all bullish or we're all bearish. Okay. Now, news, economic reports, and things that we look at as we break things down inside day and so on, all of this leads us to, what are we going to do today? Okay. We must have a very solid pre-market prep in a way that we can understand the market conditions. Okay. The daily charts on the S&P have, and the other equity indexes have respected the 50-day moving average. Now, this is pretty bullish. Okay, price closing above, basing, and then holding the line, so to speak. We went up and hit a resistance level, a leg base. The next level up above, we're looking at 59.03, and then of course we're getting back up to the highs, all-time highs, which are not too far away, up above 6,200-ish. Okay. When you go back in history and you start looking at how a uptrend starts and how it, comes from below the 50 and the 200 and then rest on the 50 as a support, it can be in front of a longer running trend. Other things that came out yesterday, and this was in the morning session, the president came out and said, buy stocks, buy. This market's getting ready to lift off. Okay. Bush, Obama, Biden didn't do such a great job on it, but all of them, prior to a major market move, came out and said it's a good time to buy stocks. Now, the new administration was a little more direct. Okay. Get on board or get left behind. Okay. Now, each time the president comes out and says it's a good time to buy stocks, okay, in our market timing, we might see a pullback before that. Okay. Generally, they don't say it the same day. Get in. Okay. Generally, they will say it, and then you start looking for the opportunity of where to invest, where to put money into the market, and it takes a couple of days. Now, we are still working off some of the things that happened this week. I mean, earlier this week, we had an FOMC meeting. You guys all remember that, or is it gone already? Starting 5 days before an FOMC meeting, the market tends to rise 3.5%, 4%. After the meeting, it tends to have a retracement, 3.5%, 4%. We haven't seen the retracement yet. Okay.
Order filled.
All right. We are now. I am also looking at gold. Hold on one second. Let me get my trailing stop. Okay, so, and I'm trailing it by about 5 points. on a couple of micros. Okay. Now, just a example, kind of this stair step down on gold. Okay. Each time we had this little pause, little breakout, and then drop. Okay. When you study these drops, you see that they often happen in fours, and the fourth time is just before a reversal. Okay. So we had 1 and 2 and 3, and we're working on 4. This price pattern that you're seeing, a strong drop and a base, is a drop base drop. Now, once you get familiar and seeing these, you start to anticipate the behavior from these. Now, that happened quite a few times on the equity indexes throughout the trading session. And you have to learn to see them on a fractal basis if you're seeing if you're trading on smaller time frames. As we get started, S&P, NASDAQ, Russell, and the Dow are right between supply zones. Referring back to the S&P and the inside day, again, this is market environment, and it does help us choose our trading environment, how we're going to execute on these trades. Inside days are generally choppy, sometimes lighter volume, a lot of whipsaw. Many people staying on the sidelines, okay, and kind of waiting to see what's going to happen. Okay. Now, inside days on the equity indexes, we don't take breakout trades because breakout trades often whipsaw us out or fail. Okay. And you can see that there was a small one this morning. We got a little breakout and then, of course, whipped us out. Okay. So we're waiting for zone entries. Dropping down to the smaller time frame, S&P zone, we do have a sell territory and a small supply zone. 57.25, 57.31. We have a demand zone, and at the origin where we might have the gap fill from yesterday. Okay. Speaking of gap fills, on inside days, the market often fills the gap the same day. Okay. Now, part of what we do here at the Market Institution is, putting together what the trading environment is going to produce. Okay. What are some key elements that we can document and track over and over and over again to help us plan our day? Okay. Know when to wait for the market. Now, inside days, couple little rules, no breakout trades. Okay. As we have already said. Often the better trades on the equity indexes happen around after 10:30, 11 a.m. Eastern, when we start off inside the prior session's range. This is huge. If you started trading already and taking trades in the marketplace this morning, you might have experienced some of that choppy and whipsaw action already. Okay. We want to know what's going on before getting into all that choppy and whipsaw price action. Okay, be on the side of safety and know when to wait. NASDAQ also an inside day. On inside day, gap fills most often the same day. So right now, looking at current price, if the gap is going to fill the same day, then price would have to come down and fill the gap. Being that we don't have a demand zone in that area, it's outside of that. Okay, so again, waiting is going to be one of the better things to do right at this moment. Okay. We all come in ready to trade. Okay, but noticing when we have inside days versus outside days says, hey, pull back on the range. Let's look around at some other things in the marketplace. Okay. We do have other products to trade. Bean oil in a supply zone right now. Okay. So bean oil price did break the support. has moved away greater than 2-to-1, and price now has returned to the origin of that move. Okay. Now I'll set this trade up closer to the open. Okay. Right now, the agricultures are closed and they will open again. It's kind of that quiet period. They'll open again at the regular trading session. Nat gas also showing some strength on the larger time frame at a high time frame resistance as well. And we're starting to see crude oil broke that resistance on the large time frame. And now looking to pull back and find some buyers. Okay. British pound broke the support yesterday. And now has come back deeper in the zone. This is a tested supply zone. Okay. Canadian dollar also testing that support and breaking below this little support area. We don't have much in the way come down. So when we start looking at the FX markets on a little larger time frame, we see that the ones that are weighted against the US dollar, okay. Oh, looks like gold is whipping me out here. Okay. I'll come back in on that gold trade a little bit later. Yeah, right now it looks like I'm going to get stopped out. This is a tough part right here, especially there's a lot of that whipsaw action. So I'm going to come back in and place that order to go short 33, 33 area. Yeah, tariff negotiations with China are going to be happening over the weekend. Okay. And as we kind of recognize, I think things are going to be pretty good. I think this is a whole new revenue source for the United States. Okay. So that's going to look good for stocks. It's going to look good for a lot of different things. Okay. As far as that money coming in. I think people have a big misunderstanding about tariffs. Okay. But I'll keep that opinion on the light side. Okay. Right now, we're going to look for some trade opportunities. I did re-enter. I got stopped out. Okay. First initial trade, got stopped out on gold. I am still looking for price to break down below this 33 area and get a nice move lower. Okay. Yeah, I'm kind of watching the headline news over here as well. But the thing that's going to bring a lot of volatility into the marketplace is the Fed. Okay. And we got 7 of them speaking today. Nat gas has come back up and tested the large time frame supply zone. Okay. And we might get a small pullback here, but we are making higher lows and we just made a higher high as far as a trend. Okay. So this would be more of a counter trend from the higher time frame. I'll also point out that the daily chart on nat gas is also testing a 50-day moving average. Closing above, this is going to be bullish for natural gas. Okay. Natural gas, the Globex range. I need to make a little adjustment there, right there. The Globex range compared to the daily ATR was really close to that 50% of the daily ATR. And when that happens, I tend to back away from trading because we have a lot more choppy environment going on. Okay. The crude oil. Okay. Crude oil did break resistance. We have a supply zone at 61.83, 61.62 on the larger time frame. right? And we know with these price patterns, by observing them, that once they break that resistance, the sellers have been taken out. And then we're looking for price to come back and find some buyers, okay? Price made a higher low before price took out the sellers, okay? So that's going to trigger an area in the upper 2/3 of this whole range where we're going to look for a leg base group of candles. We're looking for price to pull back. But I will point out that often when price breaks the resistance area, there is some congestion going back and forth. So the small time frame charts or small time frame trading can be utilized here, and from the large time frame, we may see if this is a topping pattern bringing us back down to demand. Okay, we're going to have some volatility here for short-term trading. Crude oil on the daily chart does look pretty bullish, making a higher low, and may target that 50 simple moving average on the way back up. Okay, we just got to find a way to trade that. Globex range compared to the daily ATR, we're right in the middle. Okay, right in that middle range. And often when that happens, we're going to see a little more choppier market conditions. See, so much of the pre-market routine that we go through is to alert us, well, hey, yeah, things are going to be a little messy as we get started today. Okay. Now, if we know that they're going to be messy, then we can sit on the sidelines until they clear up. Okay. All right. So we got we're about 6 minutes away from the market open. We know we're going to be waiting. Just looking at the different things that are coming out today, we got more executive orders at this is Pacific time. Okay. So we also have a White House press briefing. Okay. And of course, European Central Bank 9/10, which is already out. Okay. And then we do have some more Fed speakers. Okay. Now, the other thing that I want to point out is we use as an odds enhancer for market conditions. We have the US dollar, the 10 and the 2-year yield. Okay. In the pre-market, the dollar versus the yields were not correlated. And even right now, if looking at the last 5 to 10 candles, okay, they're still not correlated. Okay. So, and let's see, let's drop this back to a 30-minute chart. And NASDAQ pre-market indicator is slightly up, but really not much change. Okay. So the sentiment of the market is also mixed. Either we're going to have a good gap up or a good gap down. We can see that trader sentiment will be strong. We're already in an inside day, still trading on some lighter volume. Okay. Think we already know the conditions are going to be choppy. A lot of Fed stuff in the news and the media. Okay. We do see that the trend, the pre-market trend in the pre-market is trading above 2.5. That's bullish. Okay. We see the volatility index, its pre-market is lower by about 30 cents, and that's kind of a non-event. Okay. Now notice all the things that I'm touching on are leading to a conclusion. You're going, well, heck, I came to listen to this guy and get a trade. Okay. Well, you know what? There's times when the market says, hey, hold on, wait. And sometimes those are most important so you don't get chopped up and you don't get on the wrong side of the fence. There's several things that we look at that say, hey, right now, we don't know what's going to happen with all these Fed speakers. Okay. The equity indexes are between zones, they're inside the prior day's trading range. We're expecting choppier conditions around this open. Okay. Now, let's size that, move it back over. At the market open, we will also have our market on open order imbalance coming out, and that should come out in a minute or two. Okay. We have been monitoring the market on close where we had sell imbalance. Yesterday, we had 2.06 billion sell imbalance. Okay. So at the market close yesterday, there was a massive sell imbalance. It doesn't make a trade. It just says, hey, you know what? Who would be making that type of sell imbalance? Well, we do have mutual funds and we do have a lot of end of day transactions. And what this points out is that there are some imbalances. Okay. There were more sell orders than buy orders. Well, as supply and demand traders, that's a key piece of information. If there's more sell orders than buy orders, then I'm going to look for a supply zone to take a trade short. If there's more buy orders than sell orders, then maybe I'll look for that demand zone to be looking to go long. Okay. These are pieces of information that we are documenting on a regular basis right now to help formulate a potential trade opportunity and help us with some market direction. Okay. So, and let's see, we're almost there. Let's see. Yep, we're about 2 minutes away from that. All right, I did get stopped out on gold. I'm planning to re-enter short at 33 area. To project the move lower, okay, based off of these price patterns, you'll see that there's a low point and a breakout. Okay. Using your Fibonacci price extension tool, you can go from low to high and then turn on the Fibonacci extensions. I'm going to focus more on the 314, 261.8, 224, 161.8, and 127. Okay. Now the 113 is also for a momentum reversal, and we want to put that on just to get an idea where things are at. Okay. And we can see that when we have this particular pattern, strong move down, basing, price pops above and drops, that the lower levels, okay, target range that we can look for are those Fibonacci extensions, okay? And each one of those can help us forecast where we can anticipate price to go. Here's a nice one. It came right down to a 224 extension. We're getting a strong move out of that. So once gold has presented itself or started to make its turn, we're going to now use that. And this is the fourth time it's potentially dropping. Okay. Hasn't started doing it yet. Okay. But we're going to look for that move. And you can see right down here, we got a confluence of Fibonacci price extensions and demand zones. Okay. So we'll use that as a profit potential. If price starts, if we get an entry, we're going to look for that 32.71. All right, so let's see, did that come out yet? There it is. Okay, so the market open order imbalance right now is a buy imbalance of 166 million. Negative on the NASDAQ, positive on the Dow, and negative on the Mag 7. Okay. Now, again, this stuff doesn't make a trade. It just helps us assess, is there buying coming into the market on the equity indexes or selling at the moment? Okay. Our expectations today as an inside day is we're going to look for the gap fill. Okay. We must take zone entries. Let's drop down to a smaller time frame and find out where all that information is at. Okay. We have to wait. I know nobody wants to wait for a trade. Are we seeing that NVIDIA and Apple, which is our two large indicators as well? When NVIDIA and Apple are correlated, the index tends to follow. Okay. When non-correlated, one down and one up, it's a choppy market condition. Okay. So let's go out to the exchange traded funds. I got to get an idea of, yeah. I didn't have a lot of gapping on a 20-minute chart, okay? Yesterday, we did have the market going sideways before the opening gap, okay? That meant we were having a runaway gap and price doesn't fill the gap the same trading day, okay? Versus a breakaway gap, you know, we didn't have a significant breakaway from a trend today, okay? So we're not looking for the gap, you know, that information. There are some times when the exchange traded funds do not show a strong gap up or a strong gap down to give us that odds enhancer of whether we're going to have a runaway gap or whether to have a breakaway gap or whether we're looking at exhaustion. Okay. So the exchange traded funds are mixed. We're inside the prior day's trading range. Okay. Things are a little choppy. Okay. So let's look at what else we can participate in. All right. So seeing that gas popping up, crude oil coming back down, British pound coming out of demand. Soybeans still going up. Let's take a look at that. Let's bring out our bean oil. And let's drop down. Small time frame. We're trading the July contract. July contract on bean oil would be the letter N as in Nancy. So BON 25. Okay. And I'm going to look for an opportunity to sell short as a confirmation entry. Okay. Now, if you don't trade bean oil, that's okay. We're still waiting for the equity indexes. Okay. But this, you can take the time and observe the technique. Why are we trying to go short here? You might say, hey, we're in an uptrend. Okay. Good question. As we go out to the higher time frame, let's drop out to the weekly chart, or sorry, the hourly chart. We can see that we do have a nice support, and the buyers were pushing price up at this point, and the sellers are located up above as support. Okay. So as we dig in right to the origin of the drop, it looks like we might be able to adjust that a little bit. I'm still looking to look to short, but I want to revisit this area here. Yep, that's where the leg base is on a 60-minute chart. Let's drop down to a 20. I want to see if I can get a little tighter with that entry. Well, it looks like it's going to be the same. There it is on a 35-minute chart. Nope, it's not right. All right, so I'm going to still use this one off a 60-minute. Going to take the trade as it leaves the zone. 48.63. Selling short. And my stop loss will go to the high of the day at 48.87. There we go. Trade is set up. I'm anticipating price pulling back down. And I'll use this Fibonacci price extension tool going from pivot points. Actually, I'll go from the distal line. And I'm going to use these two levels here, 47.98 and 47.12 area as target 1 and target 2. Okay. All right, we're seeing Apple and Nvidia at least going in the same direction now. S&P still choppy. Inside day, expecting the gap fill the same trading day. How are we going to get into that? Okay. See, it comes back to, always keeps coming back to, what information did we gather to verify our opinion of the market? Okay. And what we're anticipating for it to do today. For myself, I like to have very specific measurements. Okay. And as I'm looking at these specific measures, I want that magenta. It allows me to tell, to stay within my trading plan and be ready to wait. Okay. Let's see. Coming over to the Qs. Okay. Now, what I'm doing here on the exchange traded fund is I'm kind of trying to find the trend. Okay. We made the last one, we made a higher high, we made a lower low. Okay. It's also the trend is telling us to wait. My gosh. Okay. So many things out there that help us with our trading decisions. If we measure them each day and document them, we have a very good understanding of what we're waiting for. Okay, as far as our entries, we're looking for supply zones or demand zones. We're not looking for any momentum today because the momentum is we're in an inside day. Okay. Now, one of the challenges I do have with inside days is I want to give you guys some trades, but inside days are that time when we kind of just spin plates, so to speak. Okay. So we do have a trade set up on gold. We have a trade set up on bean oil. The line's in the water. Now we're just waiting for the fish to come and bite the hook. Okay. So let's look outside here and see some of the other things that might be happening. I'm going to come back over here. A dollar is pulling back. And now, let's bring a picture over here. Dollar dropping the last couple hours. These are 60-minute charts. Okay. When I'm making reference to prices pulling back or going up or going sideways, I'm generally making reference using the last 5 to 10 candles here. Okay. Being an hourly chart, it's the last 5 or 10 hours that we're watching what the market's doing here. You could drop these to any time frame you feel best about your trading plan. Okay. And just in the last hour or the last 2 hours here, we're seeing that the conditions of the market are changing, but they're not yet committed. Okay. We're still seeing the 10-year yield and the 2-year yield in a range. And we're seeing about the last 5 candles that the US dollar is in a range. Okay. When they're correlated, the conditions of the market will change to be more favorable. Right now, they're all sideways. They're not trending down, not trending up. We're an inside day on the equity indexes. Okay. You see how checking all of these pieces of information as part of a pre-market routine can help you say, okay, hands off, I need to wait. It doesn't mean you're not going to trade. It's just that when you observe, when did the inside day and this information together, what time of day did the better trade start? Okay. Now, I'm going to come back to this in just a moment. On the equity indexes, we take the Globex range and compare it to the daily ATR. That's one of our things we check. It's a specific measurement to help us out. Okay. Designed to help us understand the trading environment. Okay, Globex range compared to the daily ATR, when we're in the middle of that Globex range, okay, and the middle is between about 40 and 70% Globex range compared to the daily ATR, it's choppy. Okay, it's difficult for trading, higher risk. Okay, that's to the cash value here. The S&P futures are trading up 16 points at the moment. We have 3 Dow stocks that are negative over 94 cents, and we have 9 that are positive. Okay.
Order filled.
Net results. Oh, we just got our bean oil. Okay. Net results. 3. Oh, now we got 4. Oh, it's going back and forth. Okay. Right now, as I take this measurement, we got 3 negative and 9 positive, leaving us with 6 positives. Take the 6 and multiply it by 2 to get a value of cash. Remember, futures and cash always like to balance out. If we have 6 net positive and we multiply that by 2, then we would say cash equals 12. When we compare that to where futures are trading, futures are overbought relative to cash, but not by a whole lot. Okay. When futures and cash are balanced, we're not at those extremes of demand or supply. Okay. So many things that we can directly measure to help us understand that trading environment. Now, why is all this important? The same reason AI is important. When you have very specific information to help you understand the trading environment, can that help you make or participate in a trade and know the risk ahead of time? Okay. All right, let's make sure. I just need to double check on that. Boom, bada bing. Wow. All right, let's get our profit. 47.97. I'm going to target 1. I just took 1 contract short. All right, so 47.97 area. That's going to be my first target. And that would be a beautiful thing if it can hit. Now, what you should be observing is, why did price change right there? What was the evidence on the left-hand side of the chart that said there were more sell orders and buy orders at this point? Okay. Now, mind you, you can take a profit anytime. Okay. 87% of the time, you will get a 1-to-1 move. And it looks like we're right there. Okay. We're going to look at right now a 2-to-1 trade, which will get us right down to our first target. Okay. Now, how do you like that, Harvey? Isn't that a good one? All right, so we'll let that one play out. Now, what else is on deck? Well, we had gold, where we had a trade based off of a chart pattern. Or a 30-minute chart. Let's drop down a little smaller time frame. Let's try 10 and see if we can find anything inside of that. Okay, so we're looking for where the leg base group of candles. Let's put the little blue dots on it. Helps you guys see that better. Every candle that has a little blue dot on it is the candle's range is less than 50% of the range. Okay. And we're looking for a combination of candles, leg base. And we're going to isolate that range. Often that leg base group of candles is going to have a very strong move away. The picture on the price chart of where we might have some unfilled sell orders. Okay. Now with this specific price pattern. Price has broke above that resistance. Okay. And we're looking at that final drop as we exploited earlier on the higher time frame. And we're looking for a way to get into it. Okay. Now the smaller time frame, maybe you can find a way in. Right now, it still shows things are a little bit further away. I'm going to have to take a break down below that 33. All right. Nice little trade. And what are our equity indexes doing? Still chopping sideways. Who knew that was going to happen? We don't even have a confirmed trend yet, even on a small time frame for the exchange traded funds. Okay. Now, possibly that little pivot, yeah, possibly we made a lower high and potentially making a higher low, but do we have any confirmation yet? No. Okay. We're expecting a gap fill. 85, 90, well, about 85 to 95% of the time, the gap will fill the same trading day when we start off inside the prior session's range. Okay. If price is broken that range, we drop down to about 75 to 85% of the time, the gap will fill the same day. Price gapping outside the prior day's trading range, we're looking at low probability that the gap will fill that day. Okay. All right. Oh, nat gas. Boom, boom, boom. Took out that sell territory. I don't think I have anything drawn up higher. Okay, so I'm gonna have to do that a little bit later. All right, what else do we have on deck? Well, we had wheat. Now, taking a look at, why did so many agricultures come out today? Okay. Because they're starting to make some pictures on the price chart on these lower time frames, and this is potentially that accumulation area. Okay. How do we identify an accumulation of orders? Okay, well, if we're looking for buy orders, let's go out to the larger time frame. Is it possible that we could be putting in a reversal pattern here? I mean, after all, the trend is definitely down, lower highs, lower lows. Okay. We had 1 drop, 2 drops, 3 drops. Okay. The possibility of an accumulation of orders comes in when we have a resistance level formed. And we have that buy territory below it. Okay. So anytime I have that resistance forming, I want to anticipate and observe, is this a fresh accumulation of buy orders? That doesn't mean there's a trade at this moment. Okay. It's just a fresh accumulation of buy orders. Now, how do we verify that? Well, once price takes out the sellers and pulls back into the demand zone of the buy territory, what happened? Okay. So okay. Looking for that opportunity to go low. Okay. All right. Let's come back out here. So we're still got the bean oil going, nat gas breaking out to the upside. Oh, 90-minute chart. That's where I had the zone. Nat gas has a an area, a target if you're long, okay, and a short-term pullback. Now, notice this supply zone or a leg base is not in the sell territory. Okay, price is breaking out. There might be some unfilled orders. You got this picture, the rally, the base, and the drop. Okay, so as we are watching this area, okay, there may be some resistance there. Okay, we've already had 2 touches of resistance here, and it might be the 3rd touch. But the underlying higher time frame trend is to the upside. Till we get up to the leg base inside the sell territory, okay, we have to anticipate that this is a profit zone, taking a profit if you're long. It's not a place to get all nestled in for a downtrend, okay? It's not the place, the right area to anticipate the trend to change, okay? But we could get a little pullback. And that pullback, as you anticipated here, would be, since we're making a higher low, this would be the origin of this move. We would see if there's some unfilled orders waiting in this buy territory. Oops. Okay. So a lot of the pictures on the price chart help us make those decisions to make a trade. Okay. All right. So we're still working on the bean oil, and you may not trade bean oil. That's okay. But most traders, when they're focusing, say, I just focus on one product. I just watch the S&P. I just watch the NASDAQ. You know what? What are you watching it for? Price patterns, right? Well, those price patterns are on different products. Expand and look at it. They all have the same picture when it comes to sellers and buyers. Okay. Or timing your way into a trade. Focus on the picture on the price chart. Focus on your risk management of that. And of course, the opposing profit target. Okay. See, it's not about one product. When you understand the different products, you know, what impacts the FX market? What impacts the energy markets? What impacts the agricultural markets? Does it stem from the dollar and the treasuries? Okay. Bonds and yields. I mean, you start looking at, well, what tips over first to get to it? Beautiful thing about trading futures. Beautiful thing about trading futures is they always follow. They never lead. Okay. Futures are a derivative instrument that derives the price. There's no market makers or specialists on trading futures. There's no floor traders. It's a computer. The computer adjusts price up or down based on the underlying products. Therefore, a derivative follows the futures. So in the same aspect, what is that first tipping point to get good entries on the equity indexes, the bonds and notes? Okay. And as you start looking at the flow and why futures are so revealing is because they always follow something. Okay. Now, I'm going to take just a quick moment here. We are doing some, many of you have already started to experience how to do some of the futures trading with a proprietary trading firm. Okay. One of the proprietary trading firms that we are doing some affiliate work with is Elite Trader Funding. Okay. Now, we do have, and they have provided us today with 3 evaluation accounts. Okay. I encourage you to start looking into this while these markets are trying to figure out. I mean, they're showing a lot of great payouts where people are taking money, some small, some large, okay, depending on the efficiency of the trader, okay? 90% profit split. Now, why are we giving the evaluations away? Evaluations, once you qualify for them, and what's kind of fun is what they make fun is the trading competitions out there. Okay, they have daily payouts and so on. Okay. They're very responsive in their Discord rooms. Okay. A lot of traders are in there. I do frequent the Discord room and post some of my trades in there. But as you go through this, one of the best things about trading a proprietary firm is you're not using your money. Okay. Get an idea what your trading style is. If you're a scalper, stay a scalper. If you're swing trader, stay a swing trader. Okay. Find the best evaluation. Now take the time and look at each one of these evaluations. You got a fast track, one step, okay? And they break down the details of their trading plan for you to trade their money. If you pass the evaluation, and most of you will, all you have to do is just follow the trades we're doing here in the live trading room. We're doing the work for you. Pass the evaluation and then move to the next level where you become a funded trader. Okay. And once you become a funded trader, you already saw the profit split. Okay. A lot of support here. And I do want to bring this out. You got many different platforms that they use. You might be using them already. TradingView, Tradeovate, or NinjaTrader all work. Okay. If you're a TradeStation user for charting, that's fantastic. Just use the other platforms there to execute trades. So we want to give away those 3 $100,000 evaluations accounts. Okay. So we'll give those away to the folks that are in the live YouTube right now. Raise your hand, give us a big heart, a like and follow, and we will be we'll reach out to you in the private chat to get you those evaluation login codes. Okay. So I have been trading with a prop account as well. My team trades with a prop account and they follow the trades that we post here in the live trading room.
Order
Okay.
filled.
Hey, we just got hit on gold.
Order filled.
All right, so we got gold. Let me make sure. I've been using a lot of trailing stops based on my risk management. Okay. And you may size your position a little differently. Okay. How are we doing with our bean oil? We're still in the money on the bean oil. We got our gold. And guess what? The equity indexes are still chopping back and forth. I guess if you're a scalper, okay, that would be fantastic. Okay. But most of us, we want a bigger swing in price. And on inside days, we're not getting that follow through. Taking a look at our dashboard, the fear is getting lower. Okay. The VIX, the volatility index, still in that fearful area, uncertainty. We're not at extreme complacence yet. Okay. But that's when the market gets really euphoric. Looking at the tick, we're starting to see that there have been fewer down ticks on the NYSE and more upticks. Okay. The trend is showing that things are consolidating. These reference the advancing issues over declining issues, more bullish than bearish. Okay. More upticks than downticks and consolidation. So these are all referencing the NYSE, which would directly impact S&P futures and Dow futures. Okay. All right, taking a quick look around at a few other things. And we come back to the weighting. Okay. Now, expectations on the day. Oh, we just made a higher low on the exchange traded funds, but not a higher high yet. When a uptrend will be confirmed is when you take, well, in my book, when you take on these time frames, when the uptrend is confirmed, you'll take out 2 pivot highs, downtrend, take out 2 pivot lows. Okay. So right now we still have a lower high than the prior, and we now have a lower low, higher low. We're still waiting. Okay. Another good odds enhancer about understanding the trading environment and the trade day. Okay. Notice the bank index. It hasn't gotten far away from the short-term moving average. Bank index, which is the BKX, is the largest or the top 24 national regional banks. Okay. It's an indication of what the banks are doing. And right now, the banks are not doing a whole heck of a lot. Below the moving average, we tend to see more opportunity to the short side. Above the moving average, we see our opportunities are to the long side. The thing is, you don't want to fight the banks. Go with the overall trend of the bank index. Right now, we made a higher high, we made a lower low, possibly a higher low. It's choppy. We're just starting to see the bank index dropping. And we can see with NVIDIA and Apple, at least they have green candles, okay, but they're still chopping sideways. Inside days are difficult. If you know it's an inside day, then you can plan accordingly. Do inside day trading. You may adjust your trade plan down to a short-term profit taking, very short-term, almost even scalping, okay? But still take good quality entries, okay? All right, so we're still in the crude oil. I'm at break even now. Okay, with the trailing stop in these market conditions, I want to stay in the trade longer, or as long as I can, but I want to have minimal risk. Okay, so the trailing stop has been pretty useful for me.
Order filled.
All right. So I'm still anticipating that larger time frame. That was what I was willing to risk on the trade. Okay. And we're going to come in at 33.27. 27. And we'll look for it to break lower down. Once filled, I'll come back in and put my trailing stop loss. All right. Now remember, inside days, you're going to look for short-term profit taking. Okay. Is a short-term profit taking $100? Is that part of your trading plan? Well, I want to stay in trades as long as I can and maximize profit potential. Okay. But on inside days, you have to anticipate taking that profit a little bit more quickly. It's just an indication of the environment. Okay. Why did I switch to a trailing stop versus giving a hard stop? Inside day. When the equity indexes are inside the prior day's trading range, we often have that difficult trading environment. Okay. So these are just things that we're pointing out in order to help keep traders safe in order to help you get qualified so that you can have a funded account. Okay. We have to learn how to manage that risk. All right. Now, this whole mess right now has made a resistance area. And we're going to isolate that resistance area. It is a range. It's not just a straight line. Now, what's going on below that resistance is that potential buy territory. Okay. When the markets are making a fresh accumulation of orders, it is pretty volatile here. Reversal patterns are often volatile and have a lot of ups and downs. Okay. Continuation patterns are also in between the range of the continuation. There's a lot of reversal back and forth. Okay. So the resistance just shows us where there were willing sellers or sell orders parked. Okay. The buy territory is not active until price breaks above. With indications of the inside day, we must wait for a supply zone trade entry. Okay. For those that are a little aggressive, you could take once price breaks out, but I'd really advise not taking a breakout trade on an inside day. Okay. There's just a lot of potential risk. The other thing about an inside day and why I put the 5 p.m. close on here is that's where I anticipate the gap fill. Price must come back down to this area, or it often does when we start off as an inside day. Okay. NASDAQ also building that. So when I have minimum 3 touches of resistance or 3 touches of support, okay, that helps me identify that range where I anticipate that. And the basic part of this is
Order filled.
there were just more sell orders here.
Order filled.
Okay, so we are back in gold. Let's get our trailing stop on there. Now you can adjust based off of your risk parameters, whether you 5-point trailing stop is going to fit your trade plan, a 6-point, 7-point. Okay. I'm going to change this up just a little bit more. All right. Now, once you put your stop loss in place, okay, go up and look at the risk you have on the trade. I got $131 risk. I'm trading short 3 micros. Okay. Price will trail this down. Now, if $131 is, or if that risk that you now see in a dollar form is too big for your trading plan, then quickly size your position down so you can stay in for the bigger move. Okay. And because if you don't, you're just going to get whipsawed out of these trades. Okay. If knowing your risk parameters, okay, is very important for your trade plan. So another execution on gold going short. Okay. And we got a price target that we're looking for at 32.71. Okay. And we'll see how that plays out. Okay. What I do know is I have a risk of $131 on this trade. Okay. Bean oil. Okay, we're still in the green. But the indexes are an inside day, so things are whipsaw and choppy. Okay. Short-term profit taking for this trading environment. Euro's pushing back up, old support, maybe new resistance. Do just noticed here, let's come out to the euro. There is another leg base zone that might find some resistance right there about that 1.13. Okay. The trader you can set an alert when price gets there. Notice the range of the zone, that would be your risk. If that risk is too big, size the position down so it fits your trading plan. We have the 10-year and the 5-year coming out of a demand zone. Okay, might get a short-term trade off of that, moving up. The indication from this that the bonds and notes moving up, we might look over and see if the inverse of the yields are moving down, dollar moving down, or the yields moving down. Okay. The 10 and the 2-year yield and the dollar in good trading environment are inverse of the bonds and notes. Okay. We watch for times when they are correlated. Okay. To see, hey, that's not a good trading environment. Okay. Let's see, we got crude oil continuing to move lower. Okay. On the higher time frame, I have that old resistance marked. Okay. And we could probably extend that into the overnight session where it broke out. Okay. So that's this red line that you see here, a red box, is the same thing I have on a 90-minute chart. Now, anticipate what novice traders will be thinking at this point. Old resistance becomes new support. You've heard that one before? Okay. Okay. This whole area in the overnight session and the 5 p.m. and the pit close are right in that resistance area. Okay. In order to get a new solid uptrend on the higher time frame, price needs to come deeper. As price breaks above resistance and starts going back, generally you'll form another topping pattern. Okay, before dipping back down into a demand zone. Okay. In anticipation of that, let's look for it. And very often, if you have marked the 5 p.m. close and the pit close, price likes to return to that area, almost like a gap fill. So let's identify inside of that area, the leg base group of candles. Okay. Not seeing it right. I'm looking inside this range here. So let's change the time frame. Go 6 minute. See, it doesn't matter the time frame. If you're stuck on time frames, okay, that's okay. You just you're going to always be taking additional risk. By adjusting the time frame, and think about who gave us the time frames
filled.
on your chart pattern. Okay. Well, the banks and institutions, the people that that put the software together gave you specific timeframes. Most people don't deviate from those. Okay. But in trading supply and demand, it's all about that picture on the price chart and then refining it down to very specific detail of where you're going to place a trade. Once you have the leg base identified, okay, if it's in the right area, it agrees to your large time frame trend and trading, okay, then you can place the order. As we approach this 5-minute chart on crude oil, as crude oil has been moving lower from the open range and the pit open, okay, right now price dropping does not mean everybody's selling. It does mean that nobody's buying until we get down to find where the buyers push the price up. And the other notable thing is that zone was created in the overnight session. Okay. Zones created during the regular trading hours tend to have a higher possible, or have a better outcome. Okay. So I'm going to set this trade up. From 60.12 to 59.89 will be the risk on the trade. Now you can see how we're methodically walking through. Okay. What is my risk on this trade? Okay. So if you're trading mini contracts, micro contracts, standard lots, okay, size your position to your trading plan. This is the area I expect there to be some unfilled leftover orders. Okay. Now, using heating oil and gasoline as an odds enhancer, heating oil and gasoline tend to move before the crude oil. So I want to take a moment and look at heating oil and see if price is arriving at a demand or supply. Okay, same picture. Okay. All right, so 60.12, let's place that order. Okay, and then I'll place my stop loss, 59.89. And we're good to go. Now we just wait. Coming back to our equity indexes. Oh, we're almost to the gap fill. Who knew there was going to be a gap fill today? If you have not gone to our pre-market routine course, we just did an updated version of that. We do have the step-by-step process that we go through. And we explain everything that I'm in detail and give examples of what we're looking at. Once you do go through that pre-market routine course, it is your job to verify the information. Okay. We anticipated a gap fill based on the inside day, and we did that prior to market open. The same song we've been singing all day. Now, the gap fill does not mean there's a trade opportunity there, because our demand zone is much lower and there's no demand zone here. Okay. We're noticing NVIDIA, the bank index are moving lower and Apple's trying to hold its ground. Okay. That possible trend change is now not there. We still need to make a higher high, 2 of them, before we can anticipate the trend has changed. Okay. Now there is really no trend on this small time frame at the moment because we've been making lower highs and higher lows, and yeah, we know how frustrating that can be. Okay. Wow, NVIDIA coming back down strong. NASDAQ also expecting the gap fill. Demand zone is back lower. Observing the Magic 8 large market cap weighted stocks. Okay. I use an 8-minute when I'm getting really close to monitoring a chart. Okay, looking at say I'm taking a momentum trade. I want to see when the momentum is going to shift. I'll drop this down to a 5-minute or a 3-minute, sometimes 2-minute, just to see where we can potentially get the turn so I can exit the trade. As I pointed out earlier, the beautiful thing about trading futures is they always follow. Well, what did the NASDAQ futures follow? Well, 49% of the NASDAQ 100 is dictated by these 8 stocks, the price move. So it's a very good gauge of the direction based on the stocks move first and exchange traded fund adjust to from what the stocks are doing. Okay. Then the futures adjust. So as an odds enhancer, a lead indication is watching the stocks, the exchange traded fund, mostly for direction. Okay. And then you see the futures. Now, sometimes the reaction of the futures is a little bit faster. Sometimes it's a little bit slower based off of what the stocks move first, exchange traded fund second, futures follow. Okay. All right. So looking for the gap fill. And seems like my gold trade is going the right direction, but my risk management is pretty tight. Okay. Short-term profits on inside days is highly recommended. We're still in the green on bean oil. Euro is approaching that first area. Okay, Euro moving up. Canadian dollar at a speed bump area, demand. And wheat's going a little lower. So let's bring up that Euro. Often when the equity indexes are an inside day, shying away from the equity indexes, looking at some of the other products. Okay, I want to refine that area because I'm getting ready to make a trade on that. I'm going to drop down to some smaller time frames. 30-minute. There it is. All right, so we're going to look for a short. When you're looking at the leg base group of candles, you want to look at the leg candles in the zone versus the leg candles leaving the zone. If the leg candle leaving the zone is bigger, price will touch the proximal line, bounce out of that area, and then often go back and go deeper into the zone. Okay. Now, what I'm describing are the same things that we were talking about as far as the equity indexes being an inside day versus outside day and so on. Studying many picture-perfect past trade setups will allow you to see some of the details. Okay. So with this particular leg base structure in the right area, I'm looking for price to go a little deeper into the zone to execute a trade. My risk is going to be up to the distal line. And I anticipate that the price will change direction The amount of risk I will have on the trade will be from the entry to the stop loss. Don't you feel a little bit more in control when you're recognizing where price can change direction? Okay. You know what you're waiting for when you have the right picture. Okay. That doesn't mean you have to execute on the trade. It's just like, hey, this one's getting ready. I can take this horizontal line and I can put an alert on it. Enable the alert. Okay. And then once price gets close to that area, we'll be alerted. Now, if you're not going to be around and you're really set on taking a short on the euro, okay, in this volatile market, you can set the trade up ahead of time, but make sure the risk is within your parameters. Okay. Now, once price does start to come back down, our profit target, let's go back out to the larger time frame. Will be at where the leftover buyers are at. Okay. See, when we look at, let's just step out here, 480 minute. Where are we in this trend? Are we high on the curve or are we low on the curve? Have we made a reversal pattern? Is this a place to expect potentially a reversal? Well, our trend line guys might be thinking so. Okay. We did break the trend line. Now price retracing back up to potential where the sellers were at. Kind of makes sense when you go out to the large time frame, doesn't it? Okay, now drop back down to our 30-minute chart. We'll find a way to get in and manage our risk accordingly. All right, remember, it's going to be choppy today. Okay, and until we get an entry for a demand zone, okay, oh, look at that. Just to reiterate, S&P has filled the gap. NASDAQ filled the gap. Dow has filled the gap. And so has the Russell. Okay. If you took breakout trades, you probably got stopped out. Okay. There was a lot of information shared today in this session. A lot of details. Our course material does talk about the pre-market routine, the way that we gather information, the way we understand the trading environment. You can find that out on the website. Okay. So for the rest of the day, I'm going to hang out in a couple of Discord rooms. I'll be in our Discord room with a voice channel, and we'll go out to the Elite Trader Funding Discord room and hang out there as well. They have a lot of good experienced traders with a lot of knowledge that they share in that room as well. So if you want one of those evaluation accounts, make sure that you let us know in the chat, and the team will reach out to you in a private chat to get you set up with that. Okay. So I'm going to wrap up our session today. And let's see, there's a question there. 5644. Yes, there's an unfilled opening gap down there. Okay. And that's where we have our prep screen zone. Prep screen zones are located up here. We made some updates for our supply zones, and yesterday we made updates for our demand zones. Okay. All right. Be patient. Wait for it. This is the right time to be expecting price to come into a demand or supply as the floor traders complete their order flow for the day session. Happy Friday, everybody. Have a great trading session, and we'll see you over in the Discord chat, and we'll see you later. Have a good day. Bye now.